So, VP of Market Intelligence at TradeStation. Hope everyone is doing well. Just someone please shoot me a quick message. Let me know if you are all there, if you hear me. Also, please don't use the hand raising thing. Just send me something in chat. I'm going to just zip through my disclosures. Great. All right. And want to remind you to go to tradestation.com. And then on the top of the site, go to the navigation bar, tradestation.com, and go to the research tab. And then go to Insights, and you'll see an article with the Wall Street sign on it, like a street sign. And that will be the rundown I'll use for this. All the downloads are available in that. That's where we're organizing stuff now. In the past, I want to apologize because, in the past I did a lot of webinars, Art of TradeStation and Masterclass, and I didn't always have a great way to organize the zip files and the different materials. And one of the reasons actually why I decided to change to doing market trends in this way was it would make it easier to organize all those things. So going forward, you might have some items in the past that are, old materials and stuff like that. And I would just say that if you want to bear with me on those, I'm not sure I can go back and do much. Some people have asked about old ones. And what I'll do is I'm simply trying to kind of clean up all that stuff and recover all of it in a kind of new way right now. So right now, let's just go very quickly to the, all right, so if you're in TradeStation, go to Research and go to Insights. And that will show you, this is the article you want to go to, the materials. And just so you also know, the way I'm going to do this going forward is every month I'm going to update my zip file. So this is the second, on the first webinar of every month, I'm going to update it. By the way, I'm not going to be here in April. So this will go through March, but basically we are going to have the existing initial, web materials. And then there were some people asking me for some more stuff that I got emailed. So what I did was I then added that material here. And then the next time I do it, like in May, the main download will have all those extra things. And then each month I'll just keep adding. So that way, if I have questions, I will amend during the month. And then the beginning of each month, the new zip file that I put out will be, it'll include all of those running requests. It'll just get bigger as time goes on. And if you actually look at the zip file, you can see here, this was named MT Public Materials March. So then the next one will be like, May 2023 and whatever. That's kind of how it works. So that's how I'm doing this. So I've had a few questions about things, and the market now is kind of showing some kind of bearish signs. So I wanted to actually show you some of the just kind of zip through this quickly. The let's just start with the S&P and kind of take a look at this now, because my view, we're just kind of holding our breath and waiting, and now we're starting to get some clarity that things are not so wonderful probably for the overall market. And I'm going to start with well, first of all, let's look at the chart that we have here. Okay. We basically see that this was the bearish trend line from all of last year. And this is basically the bullish trend line we tried to build more recently. But I noticed something that is not good for the bulls. The 20-day moving average. So pull back, the 50-day was like right here. We rebounded, hit the 20-day, and boom. This time we pull back, try and hold the 50-day, the 200-day, but we smashed into the 20-day. And that is a pattern I've seen. Actually, I actually have this, like I said, this is actually a workspace I have not shared with you guys because I keep changing it. The ones I share with you guys, I want to keep the same. Otherwise, we end up with different versions at different dates. So anyway, so if you look at this, basically what we see now is essentially the 20-day moving average on different spots here. But what's interesting to me is RSI is right in the middle. It's really giving no kind of signal. And the other thing that was now that's standing out is we have a bearish outside day. So yesterday, last time we spoke, we were sitting down here and I was talking about the bullish forces that we're building. And before we knew it, we had a bullish outside day. We pushed higher and now we have a bearish outside day forming. So I think the thing now that is more just kind of important is when we take a look here, just where the overall market is to just kind of realize if we look at this on a longer term perspective, let's make this into a weekly chart. Might make this weekly. Space this out. What I'm concerned about now is that this could be turning into basically there's first of all the fact that this could now be a bearish flag. I mean, like for me, things like flags and stuff are not always as meaningful on things like weekly charts, but it is what it is. And depending on how you look at it, there are in some ways, there was something of an uptrend that goes back a long time. And it's hard to really draw the trend line here, but in some ways there's a trend line that goes back many years this is just sitting at. But the real concern to me here is that this has not really been more of a dramatic, kind of breakout or any kind of clarity. And so you see that little trend line that I drew earlier, kind of from here along here. And look at how we had nice little tails bouncing at it. Now we're really just sitting at it. And, if we go much lower, it's a bearish outside week. We already have a bearish outside day. To me, this is, now a situation where we have to be careful of kind of continuation to the downside. And that's kind of some of the things I'm noticing. As I put in my my other note here, so basically, is this a calm before a bearish storm? Another thing, let's look now. I'm just go back. Let's put back on the daily chart here. I'm gonna remove this trend line and show you something else. We go to drawings to another trend line. This kind of to this. Now right click on it and go to new parallel. And now this is what I'm concerned about. I didn't want to put all this on my chart, but I'm concerned that now we're in a new parallel channel to the downside. So there's other things also to be aware of. The VIX kind of lurking around 20. I'm sorry, it was building new kind of around 18 here, and now it's back over 20. And so I think this is now just another signal. And when you look at the VIX, there's a lot of space to the upside on the VIX. Also, I think when you consider how tight the S&P is here, now it makes sense to be thinking about, some kind of puts that would have some exposure. And right now, one of the strategies you can do is by looking out further dated on puts and looking the puts that are further out of the money on the SPY. What it can allow you to do is it can actually allow you to capture more of a volatility spike. When the VIX is low, it can be an interesting strategy to look for puts that have higher vega, which means higher time into the future. Another thing here is that those puts do not have as much delta. So if the S&P suddenly rallies 20 or 30 points, you're not going to have as much risk from that. But if you have that time exposure, then you're going to have the exposure to volatility. So looking out at puts that maybe even have 6 to 8 months out that are relatively far out of the money can be an approach to consider in this sort of environment. All right, let me see. There's some more questions here. All right. All right, the one other thing I wanted to show you was Fibonacci retracement. Go to drawing, Fibonacci price retracement lines. We go from here, top to bottom. This was almost exactly a 50% retracement of the sell-off from, the high to the low of the entire move last year. So that's just another thing here that kind of creates some trouble. So, I mean, we have a lot of, we have these events coming up, but to me, the problem is that in some ways, it doesn't really matter what exactly payrolls are inflation exactly is right now. What matters is that we know the Fed is not going to stop soon. We had a strong ADP report. This is one of the things I put in my note here. The February ADP payrolls and January jolts give the Fed little reason to pause. So that I think is the key thing. When you really take a step back and look at it now, it's hard to really see a lot of of the Fed. The futures are now pricing in a 50 basis point increase, another 25 basis points. And then the thing is we know this is now the market now sees this coming. They also see that we have the dot plot. So remember, this March meeting is going to have the projections, and we're going to have kind of an increased sort of sense. So now with that event like sitting out there in the future, it just kind of can pull us. It can just pull the market in that direction. And the point is that when you have an event coming and everyone thinks it's going to be either good or bad, prices tend to move toward the event. And then after the event comes out, the opposite thing happens. And that gives us basically at this point, a nice chunk of time before the Fed. And, from my perspective, when you just consider where we are, the JOLTS report for January and the ADP payrolls, today's claims were a little bit higher, but we're talking like, what were they, 211,000? I mean, this is like not much of anything that's going to do anything to the Fed. So, right now we're in that spot where we've tried to bounce. A lot of the sort of things that were working have kind of been losing their mojo, and now we're seeing this 20-day pattern that we've kind of seen before. I'm going to show you some other stuff now as we go through the workspace. Let me just first actually look at some of the other notes I had that I want to just cover some things that were important. Well, I'll just start. I mean, Tesla, for example, this is also one where the news on Tesla had a downgrade after they cut their prices. So, problems here with profitability and margins. And honestly, I mean, you look at a name like Tesla, the combination of higher rates and honestly, China. I mean, to me, there's so much uncertainty about China. Like, I'm not a geopolitical, analyst. I'm not, there's not something that you even want to necessarily invest around something like that. But just the idea right now, you look at the questions about something like China, where there's a geopolitical risk of, some kind of tit for tat, we ban TikTok, do they ban Tesla? I'm just saying, those are the kind of things the market starts to think about. The other problem, though, is that the Chinese economy, in my view, really is in serious trouble. So you just want to think right now, an automaker is an expensive consumer discretionary. Tesla has hitched their wagon to that horse. What happens if China really does remain in an economic, problem? All of these things are now, problematic for Tesla. So we were just looking at this, and this was some of the news that came out. They basically cut their prices. Berenberg downgraded them, and that's where it is. We had earlier done some chart studies, basically looking at the potential here of a move to 200. It more or less happened. If you look, also this one had a 50% price retracement, and now it's kind of in no man's land, kind of drifting here. And when I look at it, I mean, just for me, what kind of stands out is this low. And then you also have this consolidation period through here. So from my perspective here, looking closer to 165 is probably where people are going to be, possibly down to like even the 161, 162 area from here. So it's kind of like that still has some space. AMD was interesting this week. It's funny, last week as we were doing market trends, Dan Loeb, I can't remember the name of his firm, they announced a passive stake in AMD. And since then, there has been a lot of news on AI that has been driving the chip area. And it's interesting. And from my perspective, it's something we want to kind of think about, because as I was preparing market trends this week, it was like, there's just AI is popping up all over the semiconductor narrative. And it's interesting to see that in AMD, and then it was dragging a lot of other names higher. I think Bank of America mentioned Taiwan Semi as an AI beneficiary. Broadcom even, which is more of like you know, they make like analog chips and stuff. They also have an AI component to them now. So I think right now we have to realize that semiconductors still have some interesting stuff happening here. And the weirdest thing about the market right now is when you really look at it, technology in the NASDAQ doesn't look that bad. What really looks bad, and I mentioned this before, is healthcare, utilities, consumer staples look horrible. I mean, and we can look at those, and but the problem is that these are still, and financials are really starting to struggle now as well. So when you put all those things together, it's a significant weight on the index. And what's interesting though is that for people who like tech stocks, for people who like semiconductors and Nvidia and AMD, and I know that most people at TradeStation do because I see what people trade. These names have some interesting catalysts happening, and it could be interesting to keep on people's list. Why is SPY falling? Well, I'm going to show you a few more things in a minute. Those are the company news things I want to cover. I want to just mention, if you look at our leaders and laggers section here, we just mentioned here that, I'm just working through this, what we'd seen with the semiconductors and stuff. And, honestly, right now, this is just an area where it looks to me like the market is now pricing in that essential kind of Mike Wilson scenario. I'm not sure we're going to the lows, but we are not really bouncing with any conviction here. And when you consider the fact that there's all these events coming up, it's hard to see at this point, any kind of significant, risk appetite, materializing at this point in time. It's possible that the market grinds here because let's look at the S&P 500 back in like December. We saw this real kind of grinding. It's possible we do something like that here. I mean, that to me is the best case scenario for the bulls, that we grind here. And then there's other people who are going to try and just break us down through the 200-day. Very quickly, I want to mention a few other things that had kind of popped up. I'm going to go back now over to my MT main workspace, which has a lot more moving average and stuff on it. This is a healthcare ETF. I mean, everything about this is just showing a lot of weakness. Let's look at the signal scan section of my blog. And Adobe, this is one that we had published on TradingView. If you guys don't know, the TradingView ideas are available. So these are some of the ideas I put up recently. If you guys want to look at these, excuse me, I've been doing some things more recently that are a little bit more negative, like Target and Snap. I also did a while back Adobe, which is kind of interesting. Is Adobe headed lower? So we did Adobe up here when it was kind of sitting up here, around around 360. So let's look at it back on the TradeStation chart. And we basically did that idea on Adobe right here. And it plunged. And now earnings are coming up. So, one of the things I do when I look at some of the when I use my workspaces, and these are the workspaces that are in the zip files. MT main is the main one here, but it has this thing called like MA tools. I'm sorry, MA tools, and has EMA test. So for example, if we actually look here at like Adobe, right? I think it's on the list, ADBE, it hit the 21-day exponential moving average. It was there yesterday as well. So for me, this is just like your classic sort of like post-COVID, just like, bearish stock. I mean, it's amazing. Adobe went up a lot. I mean, it's amazing when you really look at the valuations of Adobe up here were really amazing. I mean, it was a huge company in terms of market cap at one point in time. And I think the other thing to remember about it is, this is a software company, and the earnings haven't been that great as recently. But the other thing is that it has a significant exposure to advertising in different ways. If people advertising is weak and a lot of their work is used to create ads in different ways. So, if we continue to see this weakness, I mean, in things like, the online ads look, we've seen it, Alphabet and these other, big companies. A company like this has just like, it's hard to really envision something good happening. I mean, just that's the trouble. Earnings are next week, but what's interesting here is that we see this exponential moving average. We're stuck at it here. And so it popped up on the scan because it was hitting the 21-day exponential moving average. This can be a decent sort of indicator. Look at how it just followed that moving average higher. And when I did this thing for TradingView, the reason why in many ways is it broke under it. So it was basically, it closed above it, like it just stayed above it this whole way, pretty much at 1 or 2 days below it. And then it just kind of peaks out. And when something goes outside that Keltner channel and just kind of comes back in, I mean, very often it goes too far and then it just rampages the other way. In both cases, like here, it goes to the bottom of the Keltner channel, breaks back to the top. And so this was that extreme move and it went down, and now it's back inside the Keltner channel and it's hitting that 21-day. And, there's nothing here that really looks super, positive. So I'm going to mention this one. But now on the bull side, semiconductors, Lam Research, semiconductor equipment company, LRCX. I mean, this is pretty interesting. To me, you look at some of these chip names, it's interesting to watch how they're holding here. And, again, we're in a situation where there is significant demand for semiconductors in different ways. And it just seems like that is not going anywhere. And a stock like this, if the market does kind of, continue lower, chop around and stuff, but this is where, people have been interested. So from my perspective, watching now to see if the market stabilizes, say we kind of bounce around, hold the 200-day or something like that. If the bulls want to come back, semiconductors is the place where they've been active. And there's a lot of names that are just in these tight patterns that haven't moved very much that could be interesting. Another one is Texas Instruments, almost a very similar chart in terms of this tight pattern, kind of coming off the lows. And what's interesting about it is you can see that, it's above the 50-day moving average. It kind of held the 200-day, and it has some of the shorter term momentum has been just kind of trying to turn higher on this. So these are names to me where it's interesting just to kind of watch them and realize that semiconductors have had a lot of relative strength. I'm going to be getting to relative strength in a minute. But now on the other side, Airbnb and Uber, you know what? All right, MACD. Let's just show you, I'm going to just open up real quick another chart. I don't want to clutter up my, let's just go to studies, MACD. Just add it real quick. And there we see this MACD has been falling. And the same thing with Airbnb. So these are names that kind of really tried to rally and now they're just fading. And so from my perspective, these are also kind of high multiple growth stocks. These are very, kind of growthy names with an environment of the Fed raising rates and stuff. These are kind of the names that are very, pre-COVID or very much ideal for a world with 0% interest rates. And, they had some rallies on news, but now that MACD is telling you that that's a sign of that momentum turning the other way. So I want to just kind of show it's interesting to look at names like this. MACD has been working on a lot of these names. So for example, you can see here when it came off the lows, MACD gave the signals. Look at Tesla. Tesla also was a very interesting story for MACD. As soon as that MACD turned down, look what happened. So another name, go back over here, was Snap. I did Snap today on TradingView. I mean, this was just, this is it. If there ever was this was one that shows, that demonstrates the cliche sell the news. So basically, this was rallying because they were going to ban TikTok, whatever. And it's just like, but this stock has just been a real, painfully struggling kind of name. And what's interesting is, it goes above this high, fails to hold. And this is the first test of the 200-day moving average on this name since it started falling in late 2021. all of last year, this stock wasn't, I mean, just look at this. So, I mean, this was one that was just kind of interesting. Now, how do you use, because one of these guys actually emailed me and said, I'm not always sure how to use some of your workspaces. Well, if you look over here on, for example, MA tools, this shows you, for example, some of these things. You can see like, the names like Adobe here that was hitting the 21-day EMA. And then if you want to look at some other things, you can look at, if we had put, I can change this MA test to like studies, edit this, and then change it to 200, right? And then I can like select, let's just remove that and put in Snap. And you would see, so if you had a series of stocks, see this one came up. So let's change this back now. Let's look like the NASDAQ 100 data, symbol list, NASDAQ 100. You can just quickly see here names that are hitting their falling 200-day today. What else do we have? eBay. That's interesting. Honeywell is, I mean, that's who knows, I haven't seen this one in a long time. But then also ILMN, which is a biotechnology remains a very challenged part of the market, along with Intuit, which is software. So a lot of these, I mean, this is, this one's trying to kind of base out here. It looks like it's, this one's been kind of trying to base here for a while, unlike something like Snap. But these are the way that I use some of these workspaces to find some of these signals. All right. Now I wanted to show you, whenever I do this, my rundown and I always try and look for one stock that's been kind of rallying for something, for some reason. And this one is Arista Networks. Now, this is an interesting company because it was added to the S&P a few years ago, and it's really been in an uptrend here. And so it's hitting a new all-time high actually today. But this company had a good earnings report on the 13th, which was right, where is that, right here. And then, they had the Cisco, gave them a boost when Cisco had good earnings. A little bit later, somewhere in here. But then there was also a Goldman thing, and Bank of America identified them as an AI name, a beneficiary of artificial intelligence. So this company runs like, it's kind of like a Cisco with like smarter networks or something. But it's been an interesting sort of name that is, it's not as much of a giant well-known name like an Apple or something, but it's had some interesting results. And here it is trying to break out to new all-time highs. This could be another name. Let's see if the market gets beaten down. This stock could get beaten down toward like 140, chop around, sit there, and this could be one you keep it on your list, put it on the list, and maybe you're going to see NetTap, has a green 21-day EMA test. For example, maybe this stock, like look at, I mean, this is, I don't even know what this is today. End phase is, this is a rising 21. I mean, it's trying to hold this one. But the key thing is, if you keep your list and you use some of these tools, this very well could have a name like, if this is a bullish name, or you look at some of these others, this could, if it pulls back, this is the way you can use the workspace, is to look for something like a pullback to that rising 21-day on a name like this. Does the market crash and this thing gets beaten down to like 140? Because then when the market stabilizes, those areas that have a recent history of relative strength will typically be the areas that outperform coming out of the, the sort of correction, especially when there's like a clear sort of reason for it, not just like it was some safety play or some contrary thing. Like right now, gold miners, for example, are kind of trying to hold their ground, and but that doesn't mean that they're going to be a strong area. I mean, this chart is much more problematic, when you consider it's under the 200-day here. I mean, gold miners are trying to stabilize a little here. My view of gold is relatively negative here, because it just seems like gold did well in the 70s because the Fed was not doing enough. But you probably cannot accuse the Fed of not doing enough now. So, from my perspective here, the real thing is, if you look at gold futures, and we were talking about this several weeks ago on Market Insights, our Market Trends, we basically said that, gold was in a tough spot. 1800 has been an important level on gold for a long time, if you look at it historically. And if you really go back and look, 1800 here for various reasons. But the key thing is is it going to hold? I mean, if the Fed just keeps smashing rates lower, this is going to be something to watch. And I think, from my view, it's in a tricky spot because, it made a lower high, versus this level here. And, you can say all you want about the government being bad or whatever drives people to like gold. But the fact is that this looks range bound, and the near term momentum might be pointing closer to the retest of these lows or even something lower. So wanted to just kind of point that out. Gold here. But the key thing is coming out of if there is some kind of bigger pullback, some of these semiconductors, this is like the SMH. So this I did want to just kind of point out, this AI thing is coming together as a narrative. Semiconductors, names like Arista Networks, people are focusing on that now. So, let's just kind of bear that in mind and see how they perform in a period of market weakness. So the upcoming events are, we know that, really it's, sorry, let me go back to this. I have different alerts firing off left and right. Payrolls tomorrow, CPI on Tuesday. From my perspective here, like I said, it's not even, these events matter, but also it's one of these things when, from a trading perspective, if the market just knows what's going to happen, it doesn't seem like at this point it really cares. And I think the bigger thing is it's like if a stock is going to go bankrupt in a year, you don't hold it and say, oh, it's a good investment for the next 3 months. People just act, and they know it's coming. And at that point, that's kind of what's happening here. So I wanted to, that's really what's happening. The market sees this thing is coming, and they see at this point the Fed ramping up what it's going to do, and not having any reason to pause at this time. And from my perspective, those revisions to inflation that we had a month ago really kind of poisoned the well for the bulls, because it was significant. It wasn't just they revised up December. If you look at the GDP report, they revised the entire third quarter. So this whole thing, about 2 months ago, it looked like we were at a point where you could really make an argument that CPI was going to go, start dropping sharply in June and July. And now that's not really so much the case. So in fact, let's take a look over at our friend, the St. Louis Federal Reserve. First one to show you, here we go. This is the yield curve inverting in a way like we really haven't seen since, I guess, the Reagan years. I don't even know if Reagan was in office at this point. Yeah, August. This is when he was in office for a short time. So, the curve right now, this inversion of the curve is just really dramatic. And it's funny, when the Fed was like pushing rates in negative territory, people said they were pushing on a string. I almost think that you could say the same thing now, because the key point is, let's look at, like, for example, the TNX.X, the 10-year, where is it? It's not going up. The yield is not moving higher. So the Fed now is just, are they actually pushing up rates or not? It's what's it really accomplishing? I think that's an interesting, point here. We can see, it's a big debate. From my perspective, I think that there's this mantra that comes from Milton Friedman that says inflation is always a monetary phenomenon. And I don't think that's true. I think that inflation is sometimes a monetary phenomenon. It's often a monetary phenomenon. But, one of my mantras is that nothing is always true in finance. You can have, safety stocks become highly risky, and then other things happen, so I think it's just this idea that, we saw from the Fed in, trying to stimulate the economy, or the Bank of Japan trying to stimulate their economy. It didn't cause inflation. They wanted to cause inflation, didn't really work. And I think now we're in a similar situation where essentially we have other drivers that are going on that are causing this inflation, but the Fed has one tool and they're going to use it. So I think that's just something to look at. And from this perspective here, it causes a difficult. It does actually set up to be something that's pretty difficult here for the market, and especially for banks. They're increasingly the financials are increasingly looking very problematic when you look at this. Before we turn to the banks, I want to show you. Let's go Fred CPI, Consumer Price Index. If we look at this, this is the actual base number. If you actually looked at this a while back, this was getting ready to, like, this number, this was actually not going up. Like a month ago when we were talking, this was flattening out. They have since revised these numbers higher. So this is no longer, remotely giving us the sense. Before, it was you had a big surge that was in May. It ended basically in May of last year, and we were in a spot where we were going to go sideways. By May or June of this year, inflation was going to start dropping. But after those revisions, it's not true anymore. Let's see the other thing. Let's just look at this. Fred. Here's another nice thing with the Fred. You go to Fred tips break even. Okay, and this shows the inflation expectation. What's interesting here is this has not really been moving up, and I think this is the reason why at this point the longer end of the curve is not moving up. So what does it mean? It means the Fed is punishing the financials now, and it's just going to be, that's just one more piece that's getting yanked out of the market. So speaking of financials, I want to just mention I actually saw something. Ally Financial. It used to be GMAC, actually. I'm pretty sure this is a company that used to be GMAC before they broke up the pieces of General Motors. This is something that you can't find on TradeStation, but I want to just kind of tell you it's interesting. Today, somebody sold 10,000 April 30 puts at a profit and rolled it to 21,000 puts at the 27 strike. So they're just basically doubling down and looking to they're looking for this thing to go to new lows. Ally Financial, they do car loans, and I think they probably do credit cards and stuff, but there's now a spreading narrative that we're going to see credit card defaults, and now that's going to pick up. So that's just the one of the things that's out there. I wanted to share this. All right, those are the main things on there. Let's see if any other questions. Can you show us some false signals with MACD? There's a lot. That's one of the reasons why I don't use MACD that often. I mean, like, for example, I don't know. I mean, this is just like Tesla we're looking at. To me, MACD is I mean, there are some false signals, and I don't think it is the most sort of useful thing. But it's also true that very often when something has this kind of, just this drain and it just keeps pulling, it does kind of give, it's when it really spreads in one direction for a certain time that the way I have found it to be useful is that if you get little pullbacks within here, this is where, wow, it's like MACD's opening up, and if you can buy it like on intraday drops, that's where it can be useful. But I don't really use MACD that often. But I did want to point out that I would say that the cases where it has been effective has been cases like this, when something is up there and it's just like, I kind of call this like a dying goose, when you just have this thing that's just drifting and sitting and the MACD goes down and it just sits and sits and then suddenly it just breaks. That tends to happen. And if we're in a market that's under pressure, this tends to be the place where, say the market does break down under the 200-day, very often a name like this will just play catch up quickly. And MACD can often be the thing to help you with that. How can one identify false signals in the stock market? Well, there's always a lot of signals. So let me actually go through now and show you. Here's what I want to just zip through here, because some people have asked, how do I use these workspaces? First, MT main, you start with key ETFs and you really use it to get a sense of where the relative strength in the market is. And what's interesting here is that we have seen in the last few, in the last, say, month or so, there was, this shows us, interestingly, that, semiconductors, wow, well, they were doing well. Now, a lot of these, I'm just looking now, a lot of these things have been just kind of changing. I mean, this gives you, for example, a sense that in the last, month to 2 months, you can clearly see that the weakness has been in things like, healthcare and stuff like that. In fact, there's another one I wanted to put on my, look at AbbVie. This one came up yesterday. This one, I don't know why I haven't put it, but see, this one was hitting that 50-day, falling down. This was on my list yesterday. Another healthcare name that just, not a pretty pattern. This attempt to rally and then just breaking down. Now it has that gap there to the downside. So this is another one that popped up on that list. So the idea is we want to look at this and take a big step back and just kind of see where's the relative strength. And just from looking at this, you can see, like, for example, in the last 3 months, semiconductors outperforming. In the last month, I mean, technology kind of outperforming. The S&P here down 5%, technology down 3%. This is the kind of relative strength I just used right off the bat to kind of get a sense of where the strength is in the market. Then I just kind of go through with the price grid, and this is something that we can use to look for stocks that are to kind of rank them and see how they perform over different time frames. So the way that this is hard to even give any signals today. And when we're in an environment like this, when the market starts to really move in a correlated way, a lot of the individual stock signals are not really going to give us very much. MA tools, though, is something that we can look to see. That was how I came up with something like that. That signal on Adobe, and we see if anything else here really coming up. This is a NASDAQ 100. If you just go to data, add symbol as S&P 500. I don't think this is a particularly useful thing to do right now, but this is what you would do to kind of look for. Say, for example, the market gets beaten down. Say we have 2 to 3 weeks of downside. Then the idea would be to look at something like this and look for stocks that are actually sitting at a rising 21-day moving, EMA. That would be a positive signal. Looking for stocks that are sitting at their 50-day moving average. I moved this to 200, but I can change this back to 50, which is how the default is on the workspace I gave you. And then this will be there for you when you're looking for it. I mean, to me, these signals right now are kind of, not hugely interesting. I mean, it's interesting. Look, D.R. Horton, the home builders have been, I continue to think that the home builders are a part of the market where people want to be kind of thinking, because, they have a very strong supply demand dynamic. And, looking at the home builder ETF, they, they are not as sensitive really to the Fed as people, say, because at the end of the day, they just don't build and they do less business, but they're not like a bank that's going to suddenly face massive losses. When times are good, the home builders just turn on their construction again and they make money. And when it's not good, they just sit back and wait. And they trade at low multiples, and it's kind of interesting to see the relative strength here in these in the home builders. The fundamentals tab has a lot of easy to sort kind of fundamentals. In an environment like this, I mean, honestly, I'm not sure there's a lot of clear sort of signals and something like this. At other times when we were in a falling rate environment, it makes sense to look for things based on high multiples, as areas to potentially avoid things like price to sales being high. But I've not really been using this a lot recently. And then these are just the standardized returns for the main ETFs. If you want to see any of these things, these are just some of because these are mutual funds. So if you ever want to see the standardized returns from mutual funds. Now, some of the things we're actually finding some other signals and stuff. I showed you guys recently. Well, let's just go through this quickly. Breadth, MT breadth. What's interesting here is we saw a lot of positive breadth here that was starting to look good, but we're not seeing it now. This signal I've mentioned in the past, when there's a number of companies above the 20-day versus number of companies above the 50-day. These two indicators here. And when you get the blue crossing over the red, it generally is positive. And right here, we're not getting it. This turned negative right there, and it has basically remained bad since. Yeah, honestly, I look at the situation here, and I'm kind of more concerned that we're in a situation like we were right here. Um, where we kind of, we kind of rallied and then it just kind of broke, tried to bounce, and everyone, oh, let's buy the 50-day, and that's, oh, it feels, yeah, we get that bounce, and then there's just no follow through. And then after that, what comes next? And I think that's really the fear here. Like I said, there's this trend line right along here, and that I think is now the kind of bigger risk. And the thing is with 2 weeks until the Fed, do we hold that trend line? I mean, that's a tough call. Um, so this is the breadth, and at other times we talked about the incredibly strong breadth. This time the breadth is not strong. Now, and the ES chart. Let's look at this. All right, the way we want to use this has 3 signals. It has the MACD. MACD is useful in my view on the hourly ES combined with these other 2 indicators. It has stochastic, and it has the 50-hour moving average speed. So when this histogram is red, it means the 50-hour moving average here. You'll notice when it turns down, this thing turns red right there. See? Anyway, there's 3 signals. You want at least two pointing in one direction. So this morning it was overbought on stochastic and the 50-hour was falling. That's a sell signal. And it worked. And this, in my opinion, typically has been an effective thing. It typically works to see this. If you see 2 of the 3, it has to be on ES. Don't use it for SPX or SPY, because the smoothing of the hourly moving average. But 2 of the 3 there, it gave you a sell signal this morning on that false breakout. And now if we look at this, what do we see? It's oversold, but the 50-hour is still falling and MACD is falling. So we still have 2 of 3 bearish. This time we're oversold, which is bullish, but we are negative on MACD and the falling, the falling 50-hour. That's how we use this chart. Price channels. This is my newest one. And what's interesting about this is someone asked, how do we use this? In a recent trade, we talked about last week, American Express had basically, it had a 21-day, it was trying to bounce a 21-day EMA. And using the price channels, look at if someone had tried to buy it, for example, look at this this is like the 2-hour price channels with 120 minutes. You can see this, it just draws that support for you. So this one is kind of interesting. American Express has been in a stronger shape than most of the other financials. And this was an example of how you use it. So from my perspective here, if you look at something that you want to be owning, something like AMD or something, this could be interesting to kind of look at. I mean, this has 15-minute, 30, 1 hour, and 2 hour. So basically, you want to kind of, see what's really working now in an environment that is, more or less bearish or bullish. If something is more bullish, and something is kind of just trending higher, sometimes it'll just hold those 15-minute price channels. And other times you need kind of steep, broader, flatter moves. So one to just kind of point this out because this has been to me a very useful sort of indicator that these price channels have worked a lot. Like Voya Financial, we had talked about that one. I mean, it's not doing well now, but we had flagged it based on a pullback right at that price channel right here. Had a bounce, now it's dying. But the price channels, look at this, it had given a signal based on that price channel. How do I download your workspaces? You go back, go to Market Insights. So if you go to tradestation.com, right, go to Research Insights, which is my blog. Go to this, which is, it's always gonna be called Market Trends. I always use this Wall Street logo, right? And then here are the downloads. Go to the zip file, and then the zip file is going to have inside of it the ELD, which has the indicators. It will have a TSW, which is the workspace. You want to basically, I can very quickly show you what it looks like. Where's my this is what I'm on my own computer, but if you go into, this is the latest zip file, and it's going to have these are the ELDs, which have the indicators. This has just the disclosures if you enjoy reading compliance disclosures. And this is another indicator which has a series of calculated indexes. A lot of these are actually used on the breadth chart here. These come from that and the advanced decline line. And then these are the workspaces. So you want to make sure you load all of the ELDs, like double click on them, and then this thing comes up and you go to, yes, and I'm not going to mess with it right now because I already have that, but you import them. And then after you import them, then you can load the workspaces. If you load the workspaces without first importing the indicators, then some of the workspaces will not work because they use these custom indicators. Okay. Things I wanted to continue with very quickly. This is another workspace that kind of combined. It has a weekly chart, it has a daily chart, and then it has 2 intraday charts with price channels. Some of these things I'm just kind of trying to, I've kind of tried to evolve them in different ways. And, it kind of gives a sense of different ways you can organize, your own work. And I just add them because some people say, oh, you had that thing like 4 months ago. Can I see it? So I like to keep that. All right, now I'm going to end up by talking about relative strength. Let's go to add study. Now, RSI and relative strength are 2 different things. RSI was created by Wells Wilder, I think his name was. Relative strength, I'm not sure who created that. Relative strength shows something's performance against the S&P 500. So I'm just going to bring that in quickly. I'm going to remove MACD for this. Now, I like to change it a little. So if I double click on the indicator, I like to look at like 21 day. I like to change the style to a histogram. And then I make this a histogram and I make it a little bit wider, and there we go. So this is Uber. You can see this does not have any like real clear sort of signals, but it's interesting when you look at, especially when you look at ETFs, to kind of have a sense of where is its relative strength. So look at like the healthcare. I mean, this just, I've never seen anything like this in healthcare. This is amazing. Something is wrong with the healthcare sector. I'm not really sure what it is. I feel like there's going to be, you're going to find that at the end, there's going to be something like in this budget that comes, or like the debt ceiling or something. They're like, they cut the thing for diabetes. They cut the reimbursements. I wouldn't be surprised if you get in the end that they're going to tweak some of these like Medicare reimbursements in a way, or Medicaid, and then suddenly it just hurts them in a way that you don't expect. And if you've ever tried to study some of these health insurers, you have to like read like about 1 million pages of like state level disclosures of reimbursement schedules. And then the end of the day is they make less money because the government is going to reimburse them at lower rates, but it's incredibly opaque. Right now, though, somebody seems to have a sense that something bad is coming in healthcare and they're getting liquidated. So it's just interesting. You can see this. But now let's look at semiconductors. So this is interesting. Now, with this relative strength here is very interesting to me. Now, if you go into this, you can change the inputs. By default, this looks at SPY, but you can use different benchmarks if you want. So you might want to say, how are semiconductors doing against the NASDAQ? So change that to Qs. And it's interesting to see there are times when semiconductors are, they lag the NASDAQ, and other times when they outperform. So it's very interesting here to see that against the Qs, semiconductors are now outperforming. What's interesting is for a lot of last year, they were really lagging as people were buying the software companies and people were worried about the cyclical stuff. But now there's a pretty interesting relative strength here in these semiconductors. And I don't know. I mean, this is just interesting to watch to see, are we going to hold here? Will this break lower, or will this just kind of sit while money drains out of other parts of the S&P 500? So I'm finding this relative strength of semiconductors right now very interesting. And the relative strength tool is the way we find it. So this is a basic indicator. It's built in the TradeStation. It can be useful whenever you're looking at a stock or an ETF to have relative strength to just quickly see, is it outperforming? Yes or no. I mean, let's look at something like, just if you look at IGV is like your classic software. If you were coming out of, back when coming out of COVID, This had a strong, just consistent, well, this is against the Qs, putting it back to the S&P. Software, like it really outperformed a lot throughout this period. But when you start to see these big underperformances, that really tells you something. So I find this to be a useful tool just to kind of have to quickly ask, is this area doing well against the market or poorly against the market? Um, and that's why I'm looking at like home builders, because honestly, like this is really significant relative strength in my view. And this is one that always also jumped out. The home builders, the semiconductors, and to a certain extent, the airlines have shown some interesting relative strength recently. So those are what this is showing me today. It's built in, everyone has this on TradeStation. Those are the main things I wanted to show you. We'll be back again next week. And let me just see if there's anything else. Oh, this thing, MT sectors, is also kind of useful for this. This shows you a sector relative to the S&P as a ratio over the weekly period. Let's look at SMH here. This just shows that semiconductors are just, really doing well against the S&P. It's pretty interesting to see this. They are, and if you think about it, this is a part of the economy that is probably in the midst of like a secular sort of growth. And it's been happening now, for a while, but they've had, relative to the S&P, they are actually still kind of like below where they were. So this is just an interesting sort of thing to show that overall money is flowing in this direction. So there's another one, this is called MT sectors. You get all these different ETFs to see what's doing well, what is gaining or losing against the overall market. So last thing I want to show you. So hope you guys have a great day. If you have any questions, you can email me at drussell@tradestation.com. And let me know if you have any other things you want me to do, and I will include them in the workspace, in the zip file next time around. Have a great day, and I'll see you next week.